Hey guys, what's up? It's me, Jonathan, and welcome back to Money Talks, where we want to offer you financial information and meet you where you are financially so that you can stick to your budget, manage to pay off your debt on your path to building wealth. Yes, guys, I do want to talk to you a little bit, just a quick video about, are you about to start in the home buying process, and what should you be considerate of? So there are really things that you should be aware of. It's just as far as the down payment and what percentage you need to look at. So one of the things that you can do is there's two basic types of loans if you're not of government affiliate, meaning your VA, USDA. But typically, other than that, you have conventional and FHA. Conventional loan doesn't have the difference between conventional and FHA, means the conventional doesn't require you to pay a mortgage insurance premium at the start of the loan process and the closing costs. But again, more of that later. Tonight, we just want to talk a little bit about the down payments that are required. So for conventional, you have 3%. Typically, most people do 5%, 15, 20, and you can go on from there. But those breaks are typically where those interest rates change throughout the process. And what you want to do is you want to compare not only the interest rate, but you also want to see if you're below that 20% threshold, what your PMI will be. The same thing goes for FHA, 3%, 5%, 10, 15, and so on. Now, the thing about FHA is, especially right now, FHA is used a lot of times for first-time home buyers. And first-time home buyers can use that FHA and pay that mortgage premium. But typically, it's been a little bit cheaper right now, depending on what lender you go to. So it's going to be important that with all these different loan types, you shop the lender, not only for credits for your closing costs, but also rates that you're paying for PMI and the like for the loan. The next you want to look at is VA. VA doesn't actually have a requirement for a down payment. That's one of the good things that we can give back to our veterans. USDA, same thing. You can finance the whole thing. Now, each one of these situations, even though you're talking about down payment, there's another piece you need to be worried about in this process, and that is the closing costs. So even if you have a VA loan, you need to be worried about the closing costs. And as we talked about in previous videos, at least in mine, title, origination, appraisal, taxes, and insurance. Those are your 5 core closing costs. The next loan I want you to think about is if you have, those were all for primary homes, meaning you're going to live there, that's where you're going to stay. If you have a secondary home, you automatically have to do 10% down for the second home. If you have an investment property, you automatically have to do 25% down for the investment property. And then if you want to do a jumbo, what is a jumbo? A non-conventional loan. That means your loan amount is typically above $548,000 and $548,250. Well, that means you have to put down at least 15% as a bare minimal for that loan. I hope you guys enjoyed this as you're trying to go through those different loan types and see what is going to be best for your scenario. It's good to know on the front end what is going to be your minimal requirements, and then what are things you should look at when you're trying to evaluate how much should I put down. Again, during this time, it's not a bad thing to conserve cash. And most people, even if you don't put that amount down at closing, you can later put it down as a principal payment and recast the loan and still get the benefit of that payment. Recasting, that means they redo your payments so that it reflects the amount that you put down. I hope you guys enjoyed this video. If you like it, give it a thumbs up. If you haven't already, please subscribe to the channel. And I can't wait to see you guys in the next video.